Finance Minister Nirmala Sitharaman on November 19th informed the Parliament that state-run banks have reported frauds worth $13.3 billion. That is over 95,760 crore rupees in the first 6 months of FY20. Between April and September this year, over 5,700 cases of fraud have been reported. Now, going by the Reserve Bank of India's annual report for FY19, cases of frauds reported by banks went up by 15% on a year-on-year basis. Now, some of the recent banking frauds that have rocked India include the Nirav Modi PNB fraud case, in which Nirav Modi got bank guarantees of 13,800 crores from PNB to receive credit from overseas banks to fund his businesses. Now, before this, Vijay Mallya, who owes 17 Indian banks an estimated 9,000 crore rupees, was accused of fraud and money laundering. Aircel promoter C. Sivasankaran was also accused by the CBI to have defaulted on 600 crore rupee loan from IDBI Bank. Recently, Cooperative Bank PMC is in the midst of a scam of under-reporting NPAs. The bank has lent nearly 70% of its loan book to HDIL, which is against RBI's lending norms. These loans have actually turned NPA. In fact, the RBI, in response to an RTI query, said that a total of 50,000 frauds worth over 2 lakh crore rupees have hit banks in India between FY9 and FY19, wherein ICICI Bank, State Bank of India and HDFC Bank have reported highest number of cases. So what is the government doing about these scams and their prevention? Well, Finance Minister Sitharaman informed the Rajya Sabha that the government has taken comprehensive measures to curb the incidences of frauds in banks. These measures included the freezing of 338,000 bank accounts of inoperative companies in the last 2 financial years, in addition to an enactment of a law with a provision to confiscate the property of economic offenders. The government has also approved the Fugitive Economic Offenders Bill to stop offenders like Vijay Mallya and Nirav Modi from escaping the law. North Block has infused 2.5 lakh crore rupees in PSU banks since FY15, and it aims to infuse another 70,000 crore rupees this year. Yet, the market capitalization of state-run banks is barely around 5 lakh crore rupees. Former Central Bank Governor Urjit Patel, in a recent lecture, also said that the dismal state of Indian banking was a failure on the part of banks, the government and the regulator until 2014, a collective failure that got banks into the current bad loan mess and low capital buffers. Asset quality slippage can be traced to the 2006-2011 credit boom, when lending grew at an average of over 20%. The government is now working towards merging 10 PSU banks into 4 large banks to improve operating efficiency, governance and accountability. After the amalgamation, only 12 PSU banks will be left in India from the current 27. While on the other hand, there is a growing clamour from experts including Nobel laureate Abhijit Banerjee that the government should privatize PSU banks to tackle the crisis in the sector. The revival of PSU banking sector is on top radar of the government. How much will these steps taken so far help in de-stressing the sector, prevent frauds or empower the banks, or more needs to be done right now, is something only time will tell us. Stay logged on to Moneycontrol, as we will be keeping you updated on all these fronts.